What is going on, traders? In this video, I'm going to show you how to buy bonds and treasuries on TD Ameritrade, although you can replicate this for other platforms as well. But conceptually, it's the same thing regardless of what broker you use. You can also use TreasuryDirect.gov, which is a government website that is free to use and allows you to buy treasuries as well. I'm also going to explain what a bond ladder is and show you how to build one too. So let's get right into it. So I assume you're watching this video because you're interested in buying bonds and treasuries, and I don't blame you. As of the time of this recording, treasury yields are still at levels that really we haven't seen in 20 to 40 years. We have most of these short-term treasuries paying over a 5% annualized yield. Now, you can go to the CNBC website to look up the treasury yields. You can also do this in TD Ameritrade, which I'll show you how to do that. But you can see here clearly you have a glimpse of everything from a 1-month treasury bill to a 30-year treasury bond. Now, a treasury essentially is just a loan that you are giving to the government, right? And it is the most secure investment in the entire world, not only in the United States as of the time of this recording, because it is backed by the full faith and credit of the US government. So in this case, when you're buying a treasury, you're buying a treasury and the government is going to pay you back this yield, and this is annualized. So say for the 2-month treasury, for instance, right now it's trading at 5.282 yield. This doesn't mean that in 2 months you're going to get 5%. It means that if you annualize the yield, it would equate to a 5.282 annual yield. It's also important to note that in treasuries, anything up to a year doesn't pay a coupon. So after we get past the 1-year mark, you get what is called a coupon. I will explain this in later detail. But basically from the 1 month to the 1 year, you are basically just buying a treasury at a discounted price. Most treasuries have a face value of $1,000 per treasury bill or treasury note. So you are just buying the treasury for less than $1,000, and at maturity, whether it's 1 month, 2 months, 3 months, when it matures, you are getting back $1,000. So for instance, if you buy a treasury for $995, you are going to get back $1,000 at maturity. Okay. So hopefully those are some of the basic things out of the way. Let's get into how to actually do this. When you're in TD Ameritrade, you cannot trade treasuries on Thinkorswim, by the way. If you're on TD Ameritrade, you have to use the TD Ameritrade website. But then after you buy the treasury, you will actually see it in your Thinkorswim account if you use Thinkorswim. So we're going to go into trade and we're going to go into bonds and CDs. Now, here you will see all of the US treasuries. There's a couple of things that I have to explain here. Treasuries are a market, just like any other market, just like the stock market, just like the real estate market. So there are treasuries that are already trading in the market, which have already been issued. And then there are what we call new issues, right? So new issues are treasuries that are sold at auctions that haven't been issued yet. And there are treasuries that are on the market. Now, I'm going to be showing you how to buy both. In this case, let's buy some treasuries that are already on the market. So if we go to US treasuries, in this case, I want to buy short-term treasuries, 0 to 1 year, because I'm getting the most yield. And I'm worried mostly about the short term due to inflation, and I do have long-term investments already. So I'm going to be clicking on the treasuries that are available. And these are the list of treasuries available for me to buy. Now, how do we read this? Well, what we are looking for is yield to maturity, YTM. That means that is the yield that I'm going to get from now until the treasury bill matures. And these are basically just a mixture of all treasuries that are going to be maturing within 0 to 1 year, because that is what we selected. But when we take a look at quantity and minimum, this is the max that you can buy because that's what's available, and the minimum is this. Now, it's important to know that every one lot, right, it equates to $1,000. So when you see a minimum of 1,000, that means that you need a minimum of $1 million to buy this specific treasury. So what we want to look for is we want to sort by yield to maturity, and we want to look for a minimum that is aligned with how much we want to spend. So in this case, I'm looking at these treasury notes here. The yield to maturity is 5.1, and this one matures on July 15th, 2023. As of the time of this recording, this is May 3rd. So June, July. So we're talking about maturing within 2 months from now. Now, it doesn't mean that this is a 2-month treasury. This initially, if we take a look at its stats, was issued July 15th, 2020. So this was actually a 3-year treasury that has hit the market, because remember, you can actually trade treasuries. So even if you buy a treasury, you can put it on the market to sell if you don't want it anymore, right? It's not like a certificate of deposit where once you invest in the treasury, you have to remain in there until maturity. You can actually sell it. Now, there are some penalties depending on the brokerage that you use, the time that you've held the treasury, and also it's subject to price changes, right? As interest rates go up, all treasuries go down in price. But I can buy this treasury and it matures on July 15, 2023, which is 2 months from today, and I can get this 5.1 yield to maturity. The minimum is $75,000. So let me go ahead and click buy. So I'm going to come down here and put 100. So as you see here, it's going to cost me $99,057, and I'm going to get 100,000 back at maturity. And remember, this matures on July 15, 2023. So I'm going to go ahead and go buy, review order, and place order. And now we just bought $100,000 worth of these treasuries on the open market with a yield of with an annualized yield of 5.1%. Now I'm going to go back in and buy ones that expire in 1 month. Why? Because I want to show you what a bond ladder is. Now, a bond ladder doesn't have to be complicated. I'm going to explain it to you Khan Academy style very easily here. So a bond ladder is basically just a series of bonds, of 2 or more bonds that expire at different times. So in this case, I want to buy a 1-month bond or a 1-month treasury, right? And a treasury that matures in 2 months. So after a month passes and this 1 month comes to maturity, right? This is now going to be 0 months because it's maturing. This 2 month is going to expire or mature in 1 month, right? Because 1 month has passed. Let's just say that 1 month has passed. So now I'm getting the full face value back for this 1 month treasury that now has matured. I'm going to take this and put it back into a 2-month treasury, right? So now after a month has passed, I take the 1 month that has matured, put it back in a 2-month, and now I have the original 2 month that matures in 1 month and a new 2 month that matures in 2 months. And same thing, rinse and repeat. Once this 2 month is done, say another month passes, and this 2 month, which now has a month left, is now at 0 months because another month passes. I'm going to take that and put it in another 2 month. Now you could do this with a 1 month, 2 month, and 3 month, for instance, treasury, right? Or you could do it with a 1 year, 2 year, 3 year. It really depends on your time horizon and the yield that you want to capture. That exactly is what a bond ladder is. It's not that complicated. So in this case, I'm going to go to trade. I'm going to go back to bonds and CDs. We're going to go to 0 to 1 year. And now I'm going to look for something with a high yield to maturity that expires in a month that doesn't require a gazillion dollars to buy, right? So in this case, I want to look for something, again, it's May 3rd. I want to look for something that expires in June that also gives me a high yield. And what we could do is sort it by maturity, right? And let's see if we can find one that expires soon. Well, I can't find one that meets my criteria. So what am I going to do here? Well, this is where you go to the new issues. So I can't find one on the market that meets my criteria, which is high yield that matures in a month that doesn't have a $1 million or something similar requirement, right? So obviously I can come down here and I can buy ones that expire in 20 days or whatever, but look at the yield to maturity. I'm getting only 3.714. So I want something that captures this yield here. So what am I going to do? I'm going to go to new issues. Now, remember I told you that there are two kinds or two methods of buying treasuries. You have treasury auctions, which are new issues. In this case, I know the 4-week treasuries are auctioned off every Thursday. It's going to be different for different durations. Or you can buy it on the open market. I couldn't find any on the open market, so I'm going to bid in an auction. And this is how you do it. You go to new issues in TD Ameritrade. Again, you could do this in TreasuryDirect.gov or Fidelity or whatever broker you use. And I'm going to go to view. And here are all of the auctions that are upcoming. The ones that are available for me to bid on are the ones that have the radio button open for me, right? So again, I bought 100,000 of the 2 month, and I want ones that expire in a month or 4 weeks. So I see that there's a treasury auction coming up tomorrow, because today's Wednesday, May 3rd. Tomorrow's a Thursday, which we will get a new treasury auction for the 4 week. The minimum is a 1 lot, which is $1,000. So I'm going to go ahead and select that. And I'm going to go to, let's say, what was the treasury yield on the 1 month? It's around 4.5. Okay. So I'm going to go here and I'm going to select 150. And remember, each lot is 1,000. And I'm hoping to capture this yield. Now, here's kind of the shitty thing. Okay. When you're bidding on an auction, you don't know the exact price that you are going to get. Now, you can expect to get around this yield, okay? But you can't tell exactly because it is a new issue. It is an auction. So they cannot tell you exactly what it is. So I'm going to go ahead and place the order. And now tomorrow morning, I should see this pop up in my TD Ameritrade account as order fulfilled. And it will also show up in my Thinkorswim, remember. Yeah, one more thing that I wanted to go over is treasuries that actually pay a coupon. Because remember, anything that's 0 to 1 year doesn't pay a coupon. You're just buying it for a discounted price and getting the face value at maturity. But say that I wanted to buy a 1 to 3 year, you could see here that the coupon is 2.5%, right? The yield to maturity on this is 4.533% on this treasury. That is the total yield, which includes the face value that you will get back at maturity plus the coupon, right? So the yield includes everything. But if we click on this treasury, you can see here, and we click on coupon, or sorry, we don't click on coupon. It tells you right here. It's 2.5%, and this is paid biannually or semi-annually. Anyway, twice a year, right? May and November, you get a coupon payment. And then at maturity, which in this case, this one matures on May 15, 2024. So next year, as of the time of this recording, you're going to get back the face value of that bond as well, which remember is $1,000. For most bonds, it's $1,000. So, you're going to be buying this for a price of $979.75, as you see here on the price. You're going to be getting back $1,000 per lot that you buy. Plus, you're going to be paid a 2.5% coupon on however much you bought in May and in November. Okay. And now you, in terms of seeing your money or whatever, you don't need to do anything special. You don't need to roll it or sell it or whatever. When it matures, it will just hit your account. As a matter of fact, you will see in your account every day that money accrues on the treasury because, they are time decaying instruments. You will see that add up every single day slowly in your account as well. And remember, you can sell your treasuries. There are different stipulations for different maturities and different brokers. You will have to look that up for your specific broker, but it's not something that you have to hold forever. Anyway, traders, hope this was helpful. This is one of the most common questions that I've been getting now because of the bond rates. We also went over this in detail in one of our last masterminds. If you guys want access to all of the mastermind calls, you want access to the Trading Academy, where we not only go over how to trade bonds and treasuries, but also how to trade futures on treasuries, which upcoming there's going to be a super lucrative trade because of some of the interest rate decisions. Click the link in the description. Make an appointment, join the academy, come be a part of the family. You get access to all of the masterminds for the entirety of the future, as well as any course that we come out with. It is all inclusive. Would love to see you in the academy. Leave a comment down below. Let me know if this was helpful. Stay safe out there, traders. Peace.